Hey everybody, it's Brian. Yep, me again. Actually, wearing the same shirt as yesterday. That's part of working from home. You can do that if you want to. I'm not here to impress anybody. I wanted to share another quick video with you. I've gotten some questions over the last couple of days. Two that probably come up quite frequently. One is, I think, a good, legitimate question that requires some training around it. It'll be very quick training. But one question is, Brian, how do I know a trade isn't going to move against me? Okay. The second question, it's not really a question as much of it as it tends to be kind of well intended advice, comes in the 2020 hindsight of reviewing a trade or a chart after things have occurred, and it usually is something like, well, if you had done such and such, you would have had such and such. Usually, well, if you hadn't moved your stop loss, or if you hadn't trailed your stop loss down, or taken profit at that certain level, you would have had a lot more money. Okay, well, let's talk about both of those. First thing is, how do you know a trade's not going to move against you? You don't. That's part of trading. That's why, like we talked about in yesterday's video, we have a loss prevention department in our business. Remember, trading is a business. We're not here to constantly learn to trade and become scholars. We're here to take action and run a business, right? And part of our business is we have a business plan. Part of that business plan, just like you would in any sticks and bricks business, comes down to controlling your losses. You've got a loss prevention department. If you've got that souvenir shop like we talked about yesterday, you want to make sure that all the keychains aren't walking out the door in somebody's pocket. You've got somebody keeping an eye on that. Same thing in trading. Set stop losses. You want to make sure that trades don't get out of hand when they move against you, because they will. When they move against you, again, because they will. Every trade's not a winner. Every day's not a winner. You're going to have losing trades. You're going to have losing days. You're going to have strings of losing trades. You may have strings of losing days. It happens. It's part of what we do. You just have to simply control the losses. Set a stop loss. It's very important. Know your risk going into that trade. Set the point where you say, hey, if this moves against me to this level, or this percentage of my account, or whatever it might be, have a means to remove that trade. Stop it out. Leave it. Yesterday was carnage in the crypto market, and there was some stats, some various screenshots that came up showing the almost $500 billion, I want to say, no, maybe it's $500 million, $500 million in losses on one platform because of traders getting leveraged out of their accounts. They had leverage trades on, trades move against them, they were liquidated losses. $500 million, it's like 500 million something. Let me find the actual amount of money. It was a ridiculous amount of money because traders just simply didn't trade with stop losses, and their accounts got liquidated. They're just gone. I mean, it's unreal. Let's see if I can find that stat in here real fast, just to make sure I'm not totally talking out of the other end of my body. Yeah, $517 million in liquidations on BitMEX yesterday. Unreal. Control your losses. Put your loss prevention department to work. Set a stop loss when you enter your trade, and let it work. And understand that taking a loss is part of trading. It's going to happen. It's not a matter of if, it's a matter of when it's going to happen. So that comes back to designing your trading plan, which I think is a good segue over to the other part, which is, well, Brian, I see that you took profit at this level yesterday, and that's great, but if you had done X, Y, or Z, you would have had more. I don't care. I have a trading plan and I stick to it. And that's what it's all about. If ifs and buts were candies and nuts, we'd all have a Merry Christmas. And I think that's an important lesson for folks to understand. Let's pop over here. Let's talk about that real quickly. Let me pull up this, and let's just say ifs and buts were candies and nuts, we'd all have a Merry Christmas. Yeah, that's what I want to call this, because we have this astute way of looking at a chart and saying, in hindsight, because like this trade, for example, yesterday, I was in a trade yesterday from 30.06, and I took profit as it moved down to a certain level over here, and I was very happy with that. I took my profit, and that met my plan for the day, and I walked away, right? Well, inevitably, someone goes, well, Brian, if you had stayed in that trade and not taken your profit and just kept it at break even, you would have taken $6,000 in profit instead of $800 in profit. Yeah, great. Well, if the market had gone against me, I would have also been stopped out for a loss or a break-even trade. If. Ifs are really easy to do in hindsight. We're very good at looking back at things and making these assumptions and projecting this fantasy world about what we could have done differently. It's going back and reliving your high school years. It's going back and reliving that argument that you had earlier in the day about what you could have done differently. It's going back and reliving the moments before the wreck that you had and thinking about what you could have done differently. It's the moments, I could go on and on. It doesn't matter. You can't do it. You can't go back and you change it. What you have to do is design a trading plan that allows you to A, control your risk, and B, take profit at a level that is greater than your initial risk, and usually 2 or 3 times that, and that gives you a winning expectancy in the long term. And that's what we're here for when we're trading. We're not here to analyze and look at what all the things that we could have done. I think it's good. Obviously, it's good to look at the what-if scenarios to see if you can learn from it and if there's anything that you could do differently to tweak your trading plan a little bit in the future. But going back and just saying, well, if you had done X, Y, or Z, you would have had, as if that would simply work 100% of the time. And it doesn't. We have to design our trading plan understanding that every trade has a 50-50 shot of coming out in our favor. Every trade is either going to win or it's going to lose. It's either going to go up or it's going to go down. We don't know which way it's going to go. We can use some methods that give us a little bit of an edge to say, hey, when these things occur, more often than not, it moves in our favor. It moves a certain direction. But we don't know. We don't know with any certainty what's actually going to happen. So we have to look at our trades and say and create a plan that gives us the ability, A, to manage the risk, and B, to take profit somewhere. We have to take profit. Now, here's the interesting thing about trades, right? Is we talk about taking profit or look at taking profit. There's many ways to manage that. Obviously, or not obviously, because it's really not obvious. One of the more profitable trading strategies out there is to have a fixed stop loss and a fixed take profit that's 3 or 4 times that initial entry. So let's say you have a just coming back to let's say yesterday, we can even look at today, but whatever, any day, it doesn't really matter. Let's say you're taking a trade at a certain level and you have a 5-point stop loss. You'd have a 15 or a 20-point take profit. And if you execute that, you can almost flip a coin. And you execute that the same way every time, every day, over the long term. You're going to have a winning. You're going to have a winning expectancy on that account. It works because you're winning so much more when you win than you're losing when you lose. The challenge with it, even though it has a hugely positive expectancy, and I have some scenarios that I ran. I don't know where they are on my desktop. I'll have to find them and maybe do another video here in the future. But the challenge with it, while it's generally a very successful trading plan, is that a user, a trader, won't stick to it because human emotion gets in the way. It's hard because so many of those trades, if you're setting a 15-point or a 20-point profit zone, what'll happen is very often those trades will move in your favor, and then they'll come back and stop you out for that loss. And you'll have that happen a number of times where the trades will move in your favor, stop you out, move in your favor, stop you out. Then it'll move the whole way. And then it'll move, in your favor and stop you out, and so on and so forth. But because you're winning, 3 or 4 times what you're losing, it gives you that positive expectancy in the long term. Psychologically, though, because you've had unrealized profit and now it turns into a loss, traders abandon that strategy. They don't like it. So then you come up with some sort of a trailing stop mechanism, which helps you, move the stop loss up, take risk off the table, and then lock in profits down the road. For me personally, I look at things on a 30-minute chart, like we're looking at right now. This is an M30 chart. And then I'll drill down after I take my trade. I'll drill down to a 5-minute chart, and then I'll trail that, taking off risk, and then eventually locking in profit if it continues to move in my favor. And for me, that works well because I've got trades that, like this one I traded this morning off of this level here, which I put into Facebook earlier, off of 29.70. And then I trailed down on an M5, and I eventually got stopped out when this pulled back after news. There's a lot of things you can do. Of course, even with that, you're never going to get the full move because there's going to be times when it moves even further in your favor and then comes back and stops you out. But for me, that works well because psychologically I can follow it. Hey, I'm taking off risk. That checks a box for me. I'm taking off risk. So that makes me feel good in my brain. My brain says, hey, you're taking off risk. That feels good. And then eventually, if the trade continues on for me, I'm locking in some profits. That feels really good. And then you might even set a point to say, hey, I'm willing to take profit at a certain level if it moves this far. You can take profit there. Now, the psychological aspect of that, if you do set a take profit point and it hits that take profit point and then continues on, you have to be comfortable and say, well, it continued on, further than that, but I took my profit and I'm happy. I met my goal for the day, and I'm pleased with that. So there's no right way of doing it. There's no right way that works 100% of the time that allows you to buy every bottom and sell every top. That doesn't exist. What you've got to do is create a trading strategy, like I've said over and over, and it's going to get boring because I'll hammer this home until the cows come home. Set up your trading strategy that gives you the ability to take a limited risk and then take profit that's 2 to 3 times what your initial risk was. And just do that over and over and over. And work out whatever your trailing stop strategy would be, or not have a stop, or strike that. Don't ever not have a stop. Don't have a trailing stop is what I meant to say. Or have a take profit point or whatever it might be. Just set the parameters at a level that you're comfortable for your business plan, and then execute it the same way every time, every day, without fail. And if you've set that up properly, you will have a positive expectancy in the long run, and you'll be a profitable trader. It doesn't mean that you're going to turn your $500 account into $1 million account in 6 months. It doesn't mean that you're going to turn your $5,000 account into $15,000 in a month. All of these things take time. As a friend of mine said the other day, it's about getting on base, just consistently hitting singles every day. Consistently get up to bat, hit a single. Get up to bat, hit a single, and you might hit the occasional home run. That's awesome. But focus on the basics. Just focus on getting up there, getting a hit, and manage your business accordingly. Right? So that's it for the day. Quick video, still longer than I wanted to be. I don't know how to keep these things down. How do I not talk so much? Anyway, 14 and a half minute video. Hopefully some information that you can take home, take to the bank, put in your memory banks, and put into your trading account. Don't worry about the what ifs, because you're always going to be great at looking back at stuff. It's going to be way different when you look back at it than it is when you're managing it at that hard right edge. So create your trading account, or create your trading plan, stick to your plan, give yourself that mathematical positive expectancy where you've got a stop loss that's a limited, negative point, and give yourself a take profit point that's 2 or 3 times what that initial risk would be. And how does the trade not move against me? It will you're going to have losses. Live with it. It's part of trading. If you can't live with it, I don't know what to tell you. Everything in life has a risk. There's always going to be risk. There's risk walking out your door. There's risk standing in your living room. Something's going to happen. It could happen at any moment. Don't worry about it. There's risk in everything. So if you're choosing to trade, manage your business using that loss prevention mechanism that's there. It's a stop loss. It's there for you. And of course, as always, if you've got friends that are looking to learn about making money from home, making money from their laptop, send them over to my channel on Facebook. It's free, facebook.com/MMFYL. MMFYL. Totally free. I'm not going to ask you for a dime for the training that I'm doing for you. Okay? I'm showing you simple trading strategies that will work, and I will get into other things as well. I know I keep saying that, but trading is my main wheelhouse. That's what I do, and but I do have other things that I do as well for list building and list monetization and other ways that you can make money outside of trading. So we will be getting to those. But at any rate, if you've got folks that want to learn this stuff and learn it for free, strategies that you can apply that are real life, that aren't super complicated, that don't require an engineering degree to do them, then send them my way, and I'm happy to keep sharing the knowledge and help share the wealth. All right, so there it is for now. Have a great day.